Welcome to Business with Louis, the show where we break down complex business concepts into actionable insights that you can use to grow your career or venture. I'm your host, Louis Riskwiser, and today we're going to dive into a crucial topic for any entrepreneur or business owner: profit versus cash flow. Profit refers to the amount of money your business earns after deducting all expenses from its revenue. It's essentially the bottom line that shows whether your business is making money or not. On the other hand, cash flow refers to the movement of money into and out of your business over a specific period. This includes everything from customer payments and sales to supplier invoices and employee salaries. Understanding the difference between profit and cash flow is vital because they are not always the same thing. A business can be profitable on paper but still struggle with cash flow, which can ultimately lead to financial difficulties or even bankruptcy. For example, a company might have a high profit margin but slow-paying customers, which means it has to wait a long time to receive payments and therefore struggles with cash flow. The concept of profit versus cash flow has been around for centuries, but its importance has become more pronounced in modern business due to factors like globalization, technological advancements, and changing consumer behaviors. In the past, businesses often relied on traditional accounting methods that focused primarily on profitability. However, as markets became more competitive and dynamic, entrepreneurs began to realize that managing cash flow was just as crucial for survival and growth. One key principle that underlies profit versus cash flow is the concept of working capital management. Working capital refers to the funds required to cover everyday expenses like payroll, rent, and inventory. Effective working capital management involves balancing short-term assets and liabilities to ensure that a business has enough liquid resources to meet its financial obligations. This can be achieved through strategies like maintaining a cash reserve, optimizing accounts receivable and payable, and managing inventory levels. Another important framework for understanding profit versus cash flow is the cash conversion cycle. The cash conversion cycle measures the time it takes for a business to convert its investments in inventory and other assets into cash. It's calculated by adding the days inventory outstanding, DIO, days sales outstanding, DSO, and subtracting the days payable outstanding, DPO. A shorter cash conversion cycle generally indicates better cash flow management, as it means a business can quickly turn its assets into cash and use it to fuel growth or pay off debts. One notable case is Amazon, which has consistently prioritized growth over profitability for many years. Despite reporting significant losses in its early days, Amazon focused on expanding its customer base, improving logistics, and investing in new technologies. This strategy put pressure on the company's cash flow, but it ultimately paid off as Amazon became one of the world's most valuable companies. Despite being highly profitable in the early 2000s, Blockbuster didn't invest enough in new technologies or respond quickly to the rise of streaming services. As a result, the company went bankrupt despite having significant profits on paper. Another example is WeWork, which expanded rapidly but struggled with cash flow due to its high operating expenses and slow-paying customers. Despite raising billions of dollars in funding, WeWork had to lay off thousands of employees and restructure its business to stay afloat. So, how can you apply the concept of profit versus cash flow in your own business or career? First, it's essential to have a clear understanding of your company's financials, including both profit margins and cash flow statements. From there, you can identify areas where you can optimize your operations to improve cash flow management. One practical tip is to prioritize investments that generate quick returns, such as reducing accounts receivable or improving inventory turnover. You should also be mindful of your pricing strategy and ensure that it aligns with your cash flow goals. For instance, offering discounts might boost sales but could also impact your profit margins and cash flow. Another challenge you might face is managing working capital, which refers to the funds required to cover everyday expenses like payroll and rent. One strategy for success is to maintain a cash reserve or line of credit that can help tide you over during periods of slow cash flow. You should also consider implementing a cash flow forecasting system to anticipate and prepare for future financial challenges. In addition to these strategies, it's crucial to stay up to date with industry trends and best practices in cash flow management. This might involve attending workshops or conferences, reading industry publications, or seeking advice from experienced entrepreneurs or financial advisors. According to a study by CB Insights, the top reasons why startups fail include running out of cash, 29%, lack of market need, 17%, and not having the right team in place, 17%. Another study by Intuit found that 61% of small businesses struggle with cash flow management, and 42% have experienced cash flow problems in the past year. These statistics highlight the critical role that profit versus cash flow plays in determining a business's success or failure. By understanding the difference between these two concepts and implementing effective strategies to manage cash flow, entrepreneurs can reduce their risk of financial difficulties and increase their chances of building a sustainable and profitable business. In conclusion, profit versus cash flow is a vital concept for any entrepreneur or business owner to understand. While profitability is essential for long-term success, cash flow management is just as crucial for survival and growth. By prioritizing working capital management, optimizing the cash conversion cycle, and staying up to date with industry trends and best practices, businesses can navigate financial challenges and achieve their goals. By applying these insights and principles to your own business or career, you can make informed decisions that drive growth, profitability, and long-term success. In the end, it's not just about making a profit, it's about managing the cash flow that will ultimately determine your business's fate. By prioritizing both profitability and cash flow management, entrepreneurs can build sustainable businesses that thrive in today's fast-paced and competitive market. Like, share, and subscribe, and remember, every great business starts with action. Make your next move count.